Rahul Chadha joining in this morning. He's founder and chief investment officer at Shikhara Investment Management. Rahul, always a pleasure to speak with you. Thank you so much for joining in today. Do you think that one thing is clear over all the pullbacks in the last 3 days? Some sting has been taken out of the tariff fears. Would that be too much of a reach right now at this point?
That's something we saw last week. See, the US government clearly said that, look, what you saw in terms of reciprocal tariffs would be the highest, and numbers could go only lower post that. And as they go through the practicality of it, you're seeing more and more exemptions come through. You were talking about the auto exemption. Prior to that was what happened for the semiconductors and the smartphones over the weekend. So increasingly, it's getting a lot more, I would say, logical, but slightly better than what we had last weekend.
Rahul, hi, good morning. Alex here. I'm just wondering how you see this, and of course it's early days, we'll see how things pan out, but then I'm just looking at the dollar index, I'm looking at the way treasuries have moved in the US, and just wondering how capital flows move in the near term. Is there going to be a little bit of caution, or do we see a move towards India, for example, towards risk assets globally, because seemingly private investors are pulling money out of US Treasury. So where does that go?
Yeah. So I think right now that money is probably finding way to gold or probably going into Swiss francs or other safe havens. And as people get a better sense on where the tariffs handle, see, our base case is these tariffs should be somewhere around 10 to 20% for most economies. Probably for China would be higher, anywhere between 20 to 30%. And then it's 6 months of those negotiation periods. Once you get some bit of a clarity on tariffs, the exemptions, etc., that's where people will start looking at beneficiaries. And something like India, like the way you said, benefits a lot because of this.
Right. Rahul, good morning. Hiral on this side. So when you talk about benefits that could be coming in for a country like India, do you think that the markets are now at an attractive valuation in terms of India? And let's break it up between large caps as well as mid caps. Are you seeing opportunities, and if so, where?
Okay. So if you look at India compared to region, most regional markets would be 10 to 15% premium to their long-term average compared to India, which is at a significant premium to the long-term average, etc. So market is not cheap, but look, the growth story is far more superior to the other emerging markets. ROEs are better, and which is where one continues to like India as a market. Look, we still find value in large caps. The large caps haven't really participated over last 12, 18 months. Last 6 months, they've gone through a period of time correction. So there would be value in large cap banks. They've done well in last 1 month. Something like Reliance would be interesting. And outside that, then there are pockets of select mid caps. Like travel tourism is a theme we've liked. Hospitals is a theme we like. So very selective about the mid caps we want to have exposure to.
I'm just wondering, Rahul, a two-part question. One is other investment opportunities in terms of gold, asset classes that you're looking at. Gold has been the buzzword this entire last couple of days with Goldman Sachs' new targets. And what the mood is like in New York right now with all of the uncertainty happening. But I'll come to the gold question first.
Okay, so I think in New York, what's happened is everybody's trying to make sense of these almost daily or fast-paced announcements which are coming. There are multiple things happening almost simultaneously. Where you hear the announcements on tariffs, you hear the agenda from the administration where they're very clear that they want to get manufacturing back in the US. They want to cut back on the trade deficits. There is a dodge at work. So as investors, pretty much like anybody else, one is trying to make sense of all these things. What is very clear is that, look, something which happened over last kind of 10 to 15 years, where most US companies outsource a large part of their production to China, is going to reverse. So what is also very clear is the US margins, which we are seeing at a record high, 13-14% will go down to kind of a normalized margin anywhere between 9 to 10%. What it means is the market goes through a 2 3 year US market, I'm talking about here, goes through a 2 3 years of price and a time correction, and the capital looks out, and that's where money will come out to countries which grab these opportunities, which are able to benefit from this China plus one opportunity, and that's where India stands.
And the question on gold, if you have a view there.
Yeah, see, I think we've liked gold quite a bit. And in fact, I was so bullish gold that I remember coming out of COVID. My wife, who used to make cakes, had a birthday cake where I was wearing gold chains and asking people to buy gold. So I think that kind of an
You
gold
have to send us those
beneficiary of
pictures.
debase.
You have to send us those
I,
pictures
I
of
will
you.
next time. Next time we'll use that picture of mine. But friends who've seen me over the years, who've seen those cakes, still talk about that. But look, that gold being big beneficiary of debasement has played out. And I think for next 2 3 years, when US as the largest economy is in transition, gold will continue to do well. But the hope is that 2 3 years later, as dollar settles at a lower level, probably then people would look to move out of gold and then go back to US again. But I think gold continues to do well in this period of uncertainty for next year or two.
Rahul, you're painting a fascinating picture of the gold jewelry, and I hope to see that picture soon. I just want to hear, you mentioned China plus one, and you mentioned that smart money would move to industries and countries that benefit from that. And the narratives are already in place. So you're talking about textiles, you're talking about APIs and chemicals to a certain extent here in India. What are you specifically looking at very closely?
I think it's going to be electronics also. We saw that what with the Apple's done. Look, this is going to be an opportunity similar to what came China's way post China joining WTO. It is really that whether we as a country are able to develop that whole ecosystem. Because look, it's not that industries will move overnight. So you need to provide the conducive environment for the whole ecosystem for the ships to happen. So you can see some of the low end manufacturing also kind of come India's way. That's something. Auto parts export. So a lot of industries can come in. So it is up to us where we provide the right incentives, where we fasten some of these bureaucratic hassles or issues which were there in the past, to make sure that we capitalize on this opportunity. Yeah.
Okay. Rahul, you have been absolutely positive in terms of IT as well as pharmaceuticals. We are just ahead of the earnings season now. I mean, we've just kick-started. Taking the global uncertainty into consideration and the domestic growth story, do you think IT and pharma would still be sectors that you would be watching out for? Or do you think these are the sectors best avoid at the current juncture?
No, I think we would use the pullbacks to add to the IT sector. Look, right now, things are in a state of flux for US. Some of these discretionary spends have been put on hold. But when you look at the comments, clearly the spends on AI are must to regain or keep the competitiveness for businesses for next 5 10 years, etc. And as you see stability come in next 3 to 6 months, you will see these spends kind of come back basically. So you would use the dips over next 3 to 6 months to add to names like Cognizant or some of the leading IT names which we've liked for a while. From a pharma sector, look, we've liked that sector similar to what's happened in IT and manufacturing. What US is going to demand of some of these pharmaceutical companies is to at least ensure that 1/4 of the supplies for the US markets are produced locally. So you want to see those dynamics kind of a play out, some of that come through in valuations of the name. You like the space, and one would like to use, again, the pullbacks over next 6 to 9 months to add to the space. Something which we like in the pharma space, and I can see the tickers on your screen, is contract manufacturing. I think markets were a bit disappointed when the Biosecure Act didn't get passed, but our view was, look, this China plus one is for real, and a fair bit of an outsourcing happened from China. A part of that is definitely going to move to India, and we've got good competent companies to gain share in that space.
Okay, contract manufacturing. You want to very quickly tell us your top few, not ideas, but then what's on your radar in that space?
Sorry, you're talking about contract
Yes,
manufacturing or
contract
general?
manufacturing.
So I think these are the leading names. These are the leading names which we have, the pyramids, etc. These are the leading names which will benefit. See, when the opportunity comes, these leading companies which have critical mass, which have the wherewithal, they would benefit from this big opportunity.
Thanks so much for joining us today. Absolute pleasure having you, Rahul, on the program.